Okay, so in today's video, I'm going to be breaking down a very interesting stock. The stock is called Firm Capital Property Trust. What does this stock do? What's it pay? What's the dividend like? Well, let's go check it out because it looks kind of interesting. So the ticker symbol is FCD-UN and it's on the Toronto Stock Exchange. The current price at the time of recording this video is $7.89 per share, and it pays a massive 6.62% dividend as of right now. Now you're probably wondering, well, that's a massive dividend. Is this a safe stock? Well, let's actually check it out. So first off, is the volume large enough so that we can get in and out easily? And that is, well, it depends on how many shares you're looking to really buy. So if you've got like $79,000 to drop into this thing, that would be like 10,000 shares. And at that point, you would be probably looking to buy this for a very long time. However, if you're only going to buy 100 shares, getting in and out of this is very easy and you wouldn't really have to worry too much. The PE ratio when it comes to REITs anyways is actually kind of on the lower end, 4.6, so it's not very expensive, and the beta is 1.25, which is actually pretty good for a REIT in my opinion. Now the 5-year chart, when we start looking at it, of course this is something that hit every single company, so we need to try and remove that from the equation. Before the pandemic or before the virus, so I don't get dinged on the Google ads, basically is a slight increase. It's not going to be world-changing increases. However, since this virus or downturn happened, it's actually done quite well. It's had a pretty steady uptick, and now it's kind of starting to level off sideways. Does that mean it's starting to go back into this territory? That is a possibility. If you could have bought it at $5 a share, you would be doing extremely well right now. But hindsight is always 20/20, and we have to remember that. Of course, there's these news stories when it comes to Firm Capital. So it's always good to read some of these news stories, or at least the headlines at the very least. I hate headlines when we start looking at these clickbaity stuff from CNN. However, when it comes to these headlines, Firm Capital Property Trust announces closing a $36 million deal when it comes to Edmonton Industrial buildings, which is pretty good in my opinion. And it's always good to see a company that is making money, which is something that you really do want to see. Of course, everyone hurt that year. 2020 was not very good for any REIT, really. But if we take that year out of it, we can see kind of a small little pattern where 2018 wasn't great, and then 2020 wasn't great, but 2019 was fantastic, and 2021 was even better. So that kind of has a nice little uptick to it, and I like that. Now, when it comes to the dividend, there's a lot of people online that say, yes, this is a dividend stock that really likes to increase dividends. But when we start looking down, a 1 cent dividend increase, in my opinion, is not very good. And a 2%, which is about 5% increase, is okay. But when we start looking at inflation, you really want to see at this point in time, when it comes to these massive 6.7% year-over-year increases to inflation, you're now looking at not a 6% increase here. You're only looking at roughly a 2% increase, which is not big enough for inflation. So while the dividend is still increasing and still paying at 6%, you are not seeing the same raise as you would when it comes to a Canadian bank like a TD. Now, what does Firm Capital really do? It's focused on creating long-term value for unit holders through capital preservation, if only I could speak English, and disciplined investing to achieve stable, distributable income. In partnership with management and industry leaders, the Trust's plan is to own as well as co-own a diversified property portfolio of multi-residential, flex industrial, and net lease, convenience retail, and blah blah blah, a whole bunch of other stuff. Basically, it's a REIT. So overall, what does this really mean? Well, of course, you're going to get nice monthly distributions. That is obviously something that's going to be coming with a REIT. You're getting something that pays you 6.6%. So if you're looking for just overall dividend size, this is definitely something that has shown proof that it's able to sustain a dividend, but also slightly increase it over time as well. Is that good? Yes. But as of right now, personally, as somebody who's a lot younger, I want to see larger growth, at least over the period before the virus, and I want to see at least larger dividend growth. The Canadian banks is something that I personally absolutely love, and you've seen this on this channel. However, they also didn't have the massive growth before the virus either, but they do increase their dividend generally somewhere in that 5 to 10% range. And if this stock continues to increase in the future at 5 to 10%, this would be something that I would be looking at saying, I want that. And just right now, the only issue is the current situation that we find ourselves in with inflation going through the roof. Yeah, that's just crazy. 6.7% right now, which is just ridiculous. But anyways, that's my thoughts. I personally really like this stock. I've been checking it out for a while, and somebody commented on it saying that I should have put it in my top REITs listing. I didn't think of it when I did that, and I should have added it. This is a good stock to own. I just personally do not own it right now, but I may in the future. I hope that you've enjoyed today's video. If you have, hit that like button, subscribe, and I'll see you guys again next time.